Today is Trick Treats, Not Tricks. We're sitting one day in advance of Halloween, so we just really wanted to take a chance to share some sweet tax tips that hopefully can reduce the fear that many have around taxes. So as we move along, if you have questions, we have our moderator here, Patricia, who can let me know that there are questions and we'll be able to cover them live on the call. We'll also have time for Q&A at the end. So if there's other questions, and certainly always feel free to reach out. We are an open door policy CPA firm. And what we mean by that is once we are working together as your tax advisors, we really welcome you to ask questions. That is one of the best ways that we can have a conversation with you, is finding out what's on your mind. So without further ado, treats, not tricks, sweet tax tips. Little disclosure, of course, is that this is provided for discussion purposes only. One of the best answers to every tax question is it depends. And it depends because actual situations may vary and require one-on-one consult to properly serve you. So what do I mean by that? We want to share this information. We do hope you can use it to make decisions. And sometimes you will need to have a one-on-one conversation, either with us or whoever your tax advisor is in your life. All right, so today's bounty, we have the tale of phantom income, the safe harbor scramble, and the deduction that almost vanished, but didn't. And what do you do now? So like I said, we want to keep this light, right? We know taxes are heavy and scary, and that's not what we're looking to do here. So let's start with the tale of phantom income. So there have been a lot of changes in the space of how income gets reported when that income is earned through these platforms, right? So let's think 10, 15 years ago, we probably never used the word Venmo as a verb, or Zelle for that matter. Now these are common places where we might be having financial transactions. What I mean by that is you might be paying or receiving money on Venmo, Zelle, PayPal, Facebook Marketplace. And if you are doing enough transactions, then that platform or marketplace is required to issue a tax form. Happens to be called 1099-K. You do not need to know the tax form name, but yes, in January you'll get an envelope or a notification in the platform that you have a tax form to download. And that is to report those transactions. And you're like, well, I have a transaction on Facebook Marketplace because I sold our really old sectional couch. And that's fine. Everyone's doing it correctly. You're doing it correctly. You found a good home for your old couch. Facebook Marketplace is doing it correctly because they are required to issue this tax form. And what comes next is that the IRS presumes that it's income, but it's not. It's just your old couch that you sold for a third of what you bought it at. And so you just need to have that reported on your tax return so that the IRS does not continue to presume that it is indeed income when it's not. So what is my takeaway? Number one, if you're using these digital platforms to pay or receive money, just know that yes, these are now being tracked. Yes, similar to banks, they have responsibilities to issue tax forms. And if you get one, it is okay. Just reach out to your tax advisor or include it in your year-end paperwork and explain why you got it. And that way it can be reported properly on your tax return if it's not indeed income. All right, so that's the tale of phantom income. Then we have the safe harbor scramble. So before I jump into kind of these, why does safe harbor become a scramble? What is safe harbor? So in the US, we have a pay-as-you-go tax system. That means that even though all of us think about taxes as an April 15th to do, taxes are being paid all year long. April 15th is merely the final date that taxes get paid. And you might ask, well, how am I supposed to pay taxes all year long? The answers are through withholdings or estimated tax payments. Well, how much should I be paying all year long? The answer is kind of in line with what you owe. And it's like, well, that's really hard to calculate. Yes, it is. So the US tax system has something called a safe harbor, and it has two ways of qualifying for a safe harbor. One is 100% or 110%, depending on your income level, of last year's tax. You can imagine, like, I owed $20,000 in tax last year. Safe harbor would mean I will definitely make sure I pay in at least $20,000 through my withholdings. Another way is 90% of your current year is getting paid in. So let's say um, current year I will owe $10,000 in tax. I will definitely make sure I pay in $9,000, or that 90%. Of those two methods, you can imagine that 90% of current year is a harder thing to calculate because your current year tax is not a fixed number until the year is said and done, versus the 110% or 100% of last year is a fixed number. So if you are trying to achieve safe harbor by doing 90% of current year tax, we're calling it here just for fun, the safe harbor scramble, because come these final weeks and months of 2025, we need to be evaluating, are we actually meeting that 90% threshold or not? And reasons why we might not be are, have we had uneven income through the year, right? We probably thought back last tax season, oh yeah, this year will look kind of like the same as last year. And what if it doesn't? What if finally in the fourth quarter, after pursuing that big job for so long, it finally closed and they paid you their upfront deposit and you have this huge spike because it was a bigger project than you were imagining actually getting through during this season? Or let's say you normally just pay through withholdings and suddenly your thing on the side's kind of doing well and making a lot of money. So that could be your income outside of your W-2. Or what if there's a seasonal surge? What if, while everything else in the news is that things are down, you're having this seasonal uptick that you weren't ready for? And so our advice here is that in order to actually qualify for a safe harbor, you will need to talk to your tax advisor. It really depends on what's been happening on the income side, on the withholdings and estimated tax payment side, to make sure that you are achieving that safe harbor that you're hoping for. And now for our third topic, the deduction that almost vanished but didn't. Again, try to make it a little spooky, spectacular with Halloween. So I know in the last year, tax has been in the news, whether you like it or not, whether that's what you're hoping to see in the news. And there were a lot of big tax laws that were supposed to be expiring. With the Tax Cuts and Jobs Act of 2017, there were certain timelines where certain deductions or tax treatments that were only in effect until the end of this year, and they were supposed to expire, meaning things would revert back to before 2017, which no one should have to remember what it was like in tax world before 2017, but that's how the law was written. But then we had a tax law, right? Another big tax law in July, happens to be called the One Big Beautiful Bill. Some people are using the acronym OBBB or OB3 to describe it. But with that tax law, there were certain things that were supposed to expire and now are never expiring. So unlike the Tax Cuts and Jobs Act, where it said, okay, this will be law for 8 years-ish, now it's saying, no, this is going to be law unless a law is passed that changes it. One of those big deductions that was going to change was going to be the qualified business income deduction, was supposed to expire. It is possible that people had already started making tax maneuvers, knowing or thinking that this was going to expire, but it's not. So think first and foremost, if you started making tax moves last year, assuming it was expiring, go back to that decision and find out whether the facts and circumstances that made that a right move then are still in play today. And if not, then again, you will need to work with your tax advisor to determine, you know, what do I do now? What are my options? Can I unwind any of the tax planning I did, assuming this was expiring? Can I make changes and by when? Now knowing it's not expiring. For everyone else who was just kind of in a, okay, wait and see what we'll do when it does expire, you're fine because what the qualified business income deduction did for you before, it will continue to do for you now. And so this deduction is something that is calculated on your tax return. It's not something that you as a business owner are having to provide any extra documentation about. It is not something that you have to have things recorded in a certain way because your tax advisor is handling all that on the preparation side. So what I will say is for someone who says, well, I don't know if I get that deduction, I would guess that you do. And it's a great time to ask your tax advisor, can you tell me a little bit more about this qualified business income deduction? Because you do have it. It is there. It is a part of the work that goes into preparing your tax return. And it might be part of the amazing things your tax advisor is doing for you without you even realizing it. So if there's any other decisions, I think what I'll say about the deduction that almost vanished but didn't, is that if there's anything else that where you made a tax planning decision because the Tax Cuts and Jobs Act was set to expire, just go back to that decision and consider whether the facts and circumstances still make your decision the right one, and if not, what can be done. And sometimes what is done, and you had to make the decision based on the best information at that time. That is absolutely a situation that we find ourselves in any time that our professional world touches legislation. All right. So, like I said, really want to keep this brief and light and not scary. Your questions can be answered. We can do any questions here live, or we also have the opportunity for you to reach out to our office or certainly reach out to your tax advisor if you already have one you're working with. Now is a great time of the year. Do not wait and be too late. Go ahead and reach out to them now. I'll flip over to ours. So again, this is Treats Not Tricks. Contact us for more help. This QR code up on the screen will take you to our Contact Us page on our website. That page just has a few short videos if you're curious to get to know us a little more. It also has an easy contact form just like you'd see on any other website where you can ask your question and we will be in touch. We truly appreciate working with people. So if you've been looking for a tax advisor who you can build a long-standing professional relationship, someone who really gets you and what you're trying to achieve, then reach out to us.